Okay, in today's video, we're going to talk about Forex money management and specific strategies to lower your risk and increase your reward. And this is from forexearlywarning.com. So what is Forex money management? You have to have specific procedures, which we will show you, to minimize losses and how to capture profits. We also believe that having a good trading system are part of an overall money management program. You got to have a great trading system, or there's the money management becomes a problem because you're trying to compensate for the bad system. We'll show you a great trading system. So is Forex money management necessary? Well, yes, only if you have an effective trading system. If you have a bad trading system, Forex money management doesn't matter because you're going to lose your entire account anyway. Now, if you have a Forex trading system that's effective, but you're using it incorrectly, then you're going to start having bad demo trades again and you won't be able to progress. But if you have a Forex trading system that's effective and the Forex trading system makes pips and you're using the system correctly, well, then all your demo trades will have overall positive pips. In this case, money management becomes very, very important because you'll be managing mostly profit rather than just managing bad trades. Remember, money management doesn't assume that your trading system is actually effective. With this money management lesson, we're going to talk about using money management versus with an effective trading system. So money management is not really that important unless you have a great trading system. Money management is different from profit management. Profit management means your trading system works. So if you come across a trading system, you have to demo trade that system. And then once you know that that system is profitable, then you can start applying money management, and then you've built yourself a complete and total Forex trading system. So you start with demo trading, then you can move on to microlots. And you can read this great article about microlots here. And you move from trading demo to micro lots, and then you continue forward into mini lots and then full scale trading. So let's talk about some basics of Forex money management ratio. It's always the number of pips you expect to make versus how many you're willing to put at risk. So if you have a trade that has 100 pips of potential, but you start the trade with a 30 pip stop, you expect to make 3.3 pips for each one you might lose. That's what you're willing to risk. Now, a lot of Forex websites, they say that a money management ratio of 1.5 to 2 is good. We think that's completely wrong. We think 3 to 4 is probably the lowest you should have. And some of the Forex early warning trading plan trades, since we trade with the higher time frames, have ratios up to 15 to 20, in some cases 30. So look at the higher time frames. And we have lessons on how to do that on multiple time frame analysis. But even if your money management ratio is low, you'll still grow your account. We just prefer to work with the higher time frames and the higher money management ratios. So now scalping has a low or sometimes negative money management ratio, and we discourage scalping or anything crazy related to trading without stops. If you're going for swing to position trading, your money management ratio will be very high, sometimes plus 20, plus 5, much better numbers if you stick with trading on the higher time frames. One of the steps of good money management is to have a great trading system. So let's show you an example of how to manage your money using a great trading system. This is the Forex early warning trading system. And this is a snapshot of an example trade entry. In this case, you can see that the yen is very strong. This is a live signal, and this is called the Forex Heatmap. These are the yen pairs. So you can see that all the yen pairs are dropping. Remember, if all the yen pairs are dropping, that means that the yen is strong. So you can see it's strong across the board, and the big movers are like the pound yen, Swiss yen, Aussie yen. So in this case, this would be the Swiss franc against the yen. The pair is consolidating, then it starts moving. And you start to get push alerts, support breakout alerts. We have a complete suite of professional alerts in our trading system. And when they start to hit, you notice that the yen is strengthening, okay? That means that all the yen pairs are dropping. So the Swiss yen, if you decide to sell the Swiss yen based on the yen strength, this would be at point number 1. It continues lower, and then right about point number 2 is you can scale out lots here. Your initial stop would go right above the previous consolidation cycle. When you scale out lots here, then you can move your initial stop to break even. This is the correct way to manage a trade with a good signaling system. Then the pair continues lower, and then it finally hits the intraday support at the end of the main trading session, where it just starts to stall and consolidate again, like over here. Once again here, you can scale out lots again. So on point number 1 is the sell entry point, and point number the initial stop order is the yellow line on the chart above here. So your initial stop will probably be around 30 pips on a pair like the Swiss yen, 30, 35 pips, and on much more volatile pairs it'll be slightly higher. That's your initial stop. Your plan is to move the stop to break even. As soon as the currency pair moves down by about 30 to 40 pips at point number 2, you move your stop down to break even. Then you have a zero risk trade. This is zero risk, okay? Now also at point number 2, you're up about 30 to 40 pips here. The total movement here was about 90 pips. At this point, you scale out lots. So if you sold 6 mini lots, you can scale out 3 mini lots here. Set your stop to break even and hold on to the other 3 mini lots and see where it goes. So if the Swiss yen, if you look at the higher time frames like the H4 and larger, and let's say it's trending down on the H4 or D1, just look for the next big support level and it will probably go down to that level. So you can actually, instead of scaling out lots twice, you can probably just scale out lots once here, move your stop to break even here, and then hold on to the trade and let it continue trending down on the higher time frame. So if all the Swiss franc pairs are going down, where the Swiss franc is the base currency, or if all the yen pairs are dropping, then you have pretty good support to stay in the trade and turn it into a trend trade on the higher time frames. So remember, money management, you must have an effective trading system. Then you can practice profit management. This is not really money management per se. This is actually profit management. That's because you have a good trading system. You set and you move your stops, scale out lots, and then you can start trading live with micro lots after you've done some demo trading. So remember, you got to have a great trading system or you can't apply any of this. If you're using, the garbage technical indicators and everything out there, you'll never see anything like this happen. You got to get the right trading system to start practicing profit management. So remember, as soon as you get into profitability, you have to scale out lots. We have a lesson here. You can click on that link and it'll tell you different ways of scaling out lots as the trade proceeds in the right direction. Every day you should drill down the charts and conduct multiple time frame analysis across 8 currencies and 28 pairs, which is the currencies and pairs that we work with at Forex Early Warning. You'll always know if the market is trending, ranging, or choppy. If the Swiss yen is trending down and all the yen pairs are trending down or something like that, you can stay in this trade, but you have to know what the market condition is. And so money management is great. We believe in it. But as a first step, you need to find a trading system works and makes pips. If your trading system is not making pips, you need to go back a step and make sure you have a effective trading system, and then you can apply money management. And then now you've got you're starting to formulate a great trading system. So money management doesn't really apply unless you have a great trading system. So this is today's lesson: Forex money management and strategies. And this is from forexearlywarning.com.